You've got an expectation that you would have most of, the MPC members vote in favor of a pause. So 41 or 46 economists said that there will be a pause in rates. A few said that there will be perhaps another 25 basis point cut in rates. The questions here to debate are, the ones that we have talked about through the last few months. And growth, of course, since we have a new GDP number at play on growth, we will talk a little bit more about growth, and the MPC will debate it as well. The question there is going to be whether the growth number is strong enough, or the growth rebound is strong enough. At 6.1%, it was a middling kind of number that we got on GVA growth, and within that there was a lot of confusion about what's moving that growth number. Some focused on core GVA and said that that's strong and hence private enterprises recovering. Others focused on consumption and said that consumption growth is weak, so maybe the economy is not recovering. Manufacturing was a question mark as well. So there's just too many interpretations. MPC's interpretation will probably be important, and if they do judge that the output gap, the negative output gap, is widening, maybe there could be a case to be made for another interest rate cut. On the other hand, inflation is more or less along the lines that the MPC has been expecting. So they had said it would be about 4.2% in the third quarter and 4.6% in the fourth quarter. You are somewhere a little bit close to that, but still below it. Core inflation, of course, remains the big question, and risks going into next year. Oil, metals, fiscal slippage, all of those risks will perhaps keep some of the more hawkish members of the MPC away from recommending a rate cut. And here I just want to quickly mention that the MPC actually tied its hands, or at least the RBI tied its hands last time when they said that 50 basis points of fiscal slippage in the current year will add 25 basis points to the headline projection on inflation. Having put that view out there, it'll be very tough for them to now say that, we are going to cut rates because we think X, Y, Z. They're not, it's just a really tough rollback to do after putting that exact number out there. The focus for the bond markets will be on liquidity. We have been talking about bond yields going up. About 706 is where they settled yesterday, but they've taken out even 710. This is despite the fact that you got at least one rating upgrade, and despite the fact that the RBI cancelled an open market operation sale. So all of that keeping in mind, the RBI will also perhaps want to calm the market. Some of the bond traders are saying that they've been getting calls from the RBI asking what's really bothering the market. So maybe watch out for that in particular. Bond yields are up about 60 basis points since October. 40 basis points since October, 60 basis points since the start of the year. And also, if you look at the difference between the repo rate and the 10-year yield, it's more than 100 basis points. There's nothing sacrosanct about the 100 basis point number, but typically one would say that when you're still accommodative, you're still neutral, at least in your policy, 100 basis points is a fairly steep sort of, curve from the overnight rate into the 10-year yield. So watch out for answers on liquidity. Lots of questions out there. Hopefully, if we get a chance, we'll put at least one of those questions. Will OMO sales continue? Has the RBI done with OMO sales for the year? Is the RBI comfortable if additional borrowing from the government comes in the Jan to March quarter, that the market will be able to support it? Does the RBI then say that if additional borrowing comes, we are committed to maintaining comfortable liquidity conditions? All of those questions will be out there, which will be in focus. And those are the questions which may move the market, unless, of course, you get a surprise rate cut, in which case, we'll...
I love how you've left room for that. No more OMO bond sales. That's the kind of commitment that the market's looking for from the RBI. So if we don't get anything as committal as that, will that hurt bond yields?
No, so I don't think they'll say it in those many words. They never do. But, in the press conference, you will get some, indication of what their stance towards OMO bond sales is. There'll be a whole bunch of questions, I'm sure, put to them on that. So anything that indicates that they are more or less done with the OMO bond sales, or anything that indicates that we are committed to maintaining comfortable liquidity, situations, anything that says that we are committed to supporting the government borrowing program, any words which are nuanced towards the understanding that liquidity situations have turned, will be comfortable enough. If they go to an extreme and say that we are committed, which they won't, but if they say that we will endeavor to maintain liquidity at 1% of NDTL, which is about 1 lakh crore or so, markets will like that. I don't know that they will say that. They very, very rarely do. But if they say something that suggests that they are not as uncomfortable with liquidity as the market is, then bond yields could go up further. I don't think they will, because a lot of bond traders are saying that the RBI has been wondering why yields have sustained above 7 and even moved towards 710. So I think they are not hugely comfortable with the levels at which we're trading on the 10-year yield.
Expecting commentary on the fiscal deficit, etc. And can I put in a little GST agenda point here? Look, are we going to get any idea from RBI on how they assess government revenue?
You won't get a number from the RBI for sure. They will not get into that. I think last MPC, they had already brought up the risk of fiscal slippage, which is why they put that box item in the monetary report, which said that if there's a 50 basis point slippage on the fiscal this year, you would add to 25 basis points on the baseline projection on inflation. Hugely debated forecast. They got a lot of criticism for that. But, that is the number that they had put out there. And if you look at the MPC minutes, even Urjit Patel, so if you, talk about the governor as the first among equals, even he had sort of talked about the fact that fiscal slippage is a risk. So I think they're well aware of that. I don't know that they would preempt the government's, announcement on increased borrowings, which is quite likely according to the market in the Jan to March quarter. But I'm sure if there are questions put to them on fiscal, they will talk about it in their statement. They will certainly talk about fiscal as one of the risks to the inflation trajectory. You get one now in February, and that will be the last.
That'll be after the budget,
right?
Yeah. That'll be the
after the budget.
So is this technically the last opportunity they really have to cut rates, if at all they are inclined to do so, or is it something that they might find more comfortable to do so in Feb, once they've had a clear idea or a clearer idea of the government's finances?
I think then you will run into the problem of how inflation is playing out. So, right now headline inflation is still below 4%. So if they really had to argue, you could argue on basis of growth is not picking up as much, inflation is still whatever. When you get into next year, inflation is expected to be between 4 and 4.5. At least that's what the RBI's projections for Q4 are. And if you are in that 4 to 4.5 band where you already taken out the midpoint of your forecast, very tough to then argue that, okay, despite all this headline inflation number, because we are comfortable on the fisc, we are going to cut rates. So actually a lot of economists, like for instance, Indranil Sengupta at Bank of America Merrill Lynch, who've been arguing for one more rate cut, have said that the window is slowly slipping away. They thought that December was this last window. And we haven't talked much about the Fed, but the fact that the Fed will continue tightening will be somewhere at the back of their minds as well.
It's up next week. 12th, 13th is the Federal Reserve's last policy meeting, and I think it possibly is also Janet Yellen's last policy meeting of the year, and not just of the year for her tenure as well. So, and they're expected to hike rates then as well. That's the consensus building up that the December rate hike will happen. So.